Good morning, traders, and I'm 2 minutes early today. And so I have 2 minutes to kind of babble and guess let's take a look at where we are. All right, 68.15, kind of the top of yesterday's range. And we'll look at some things and figure out our plan for today, which I've written and it's been sent out to my subscribers and on various YouTube discords and part of it on Twitter, etc. Okay, so here we are. Quick recap, and let's start with kind of a little. No, not that. Not that. All right, we'll do it the easy way. Let's go back to where we were. I'll start with this. Okay, that's good. If we look at a daily chart real quick, I thought I had the MAs on this. The 20-day moving average is right around here, 67.50. And this has been, we kind of undercut it the other night when we hit the local low and reclaimed it. We've got kind of congestion breakout at that 67.50 level. We had some action there. The October 10th, Friday debacle, and then we kind of reclaimed it, and we gapped up, overclaimed, refilled the gap, all the stuff that the price action TA traders like to see, and that used to be kind of my bread and butter until I entered the gamma world. Now it's the side dish, not the main dish. Okay, and so in the overnight session, we kind of bottomed out right near the 60.75 area, which has kind of been that critical area before getting to that 67.50-ish area, which we got in the overnight sessions a few times, but in the regular cash session, the local low has been whatever it was, 67, 62-ish. So like during this week of consolidation, we never quite got down to that MA during real time, but we've tested it a few times. Okay, that MA means moving average. Now, we'll come back to the roadmap in a minute. Okay, we tested near the MA, and now when I wrote it at 6 o'clock, we were kind of back over here at the 6,800 round number pivot. And while I wasn't looking when I was feeding the goats, although they feed themselves, I let them out and then they just go eat the leaves falling off the trees. And I have just some hay on like a trailer that we were moving around, just forgot to put away. And so they eat that. They're very funny with eating the leaves. There's like hundreds of leaves all over the ground as the leaves are falling. Like they'll walk over and they'll pick a particular leaf out of these 300 leaves. This one is a good one. The other 299 aren't. I can't tell the difference, but I guess I may be considered the goat by some people, but I'm definitely not the goat. Anyway, so here we are at this reaction zone. Let's switch gears real quick to the to look at the old volatility dashboard. No, I don't want to change this. That I want a line chart. And this I want the old school bar chart. Okay. And so what I want to just point out in the volatility space was just real simple. Yesterday in the pre-market when we were at our lows and we were up at 20 and everything looked scary, hairy. Once we opened, VIX basically had a steady decline as we went up and then kind of bounced a little bit toward the end of the day. Now, at the end of the day, we had that sell, and apparently that was forecast. It was forecast by me. I put it out in a note yesterday. And basically, the short version of it is, according to Nomura and other gurus, what's going on in the VIX ETN space and in the 3X, PQQs and all that kind of space, but more in the VIX ETN space, is daily when they have to roll their contracts and reconfigure for the next day, for lack of a better word, market makers have to buy Vega to balance their exposure. And long story short, that's been tending to lead these outside moves. Usually a decline, usually counter trend. So just be on the lookout for that today. There's other factors that go into it that's going to help predict it better. But just know that we can get that funny move at the end of the day. Part of it's gamma decay and part of it's coming from the VIX space. Just kind of keep it simple there. This now VVIX is back to par, to 100. We actually finally snuck below 100 the other day. But VIX is relatively high at 18-ish. This ratio about 5 and change isn't screaming complacency by a long shot. If anything, it's signaling markets cautious. Yesterday, at one point, the difference between, we won't look at constituent vol, let's look at, yesterday at one point, the difference between the VIX and the VIX futures, with these VIX futures settle into the VIX. These numbers settle into each other. And usually there's a time premium at this stage of the cycle, a point, a little, give or take, sometimes 2, sometimes a little less. And there was barely any difference at all. And so you can interpret that one of two ways, that the VIX is too high or the VIX futures are too low. I'm interpreting it as the VIX is just a little artificially high. I think the VIX is artificially high, and we'll get back around to the VIX in a minute. Remind me when we get to here. And let's switch to the options depth profile. And what we see here is gamma is basically thin. That's kind of the theme of my morning notes. Yeah, there's a biggish structure here at 6740, but it's about 2,000 contracts, which is a lot, but not a ton. We have a decent, healthy amount up here at 6865, so that would tell us that we should stall way before we get there, and that is like We have a 50 points away after this move. That's like more than 2x the expected move, or about 1.5x the expected move. That's highly unlikely. And this general area will provide a suppressive flow. Now remember, positive gamma, market makers hedge opposite the direction of the move. So as we go up, they sell. But as we go down, opposite the direction of the move, they buy. But now the same thing happens from this direction. As we go down, opposite the direction of the move, they buy. As we go up, opposite the direction of the move, they sell. Now, all these aren't in isolation, and so then you kind of have the different zones and the different like math vectors for how things end up. Where market makers are short exposure, market makers tend to hedge in the direction of the move. So as we go up, they tend to buy, accelerating the move. But as we stall, then they sell. Kind of the opposite of here. Here, they sell, but then as we stall, they buy back. Here, as we stall and pull back, they start selling. And that's kind of broadly the story here, and I kind of give a little overview of it every day. And but the point I'm making here is these are small numbers. 200 contracts, 300 contracts. And so in my note, I said even over this area, 67.85, there's nothing until 68.15, and that's where we are. Not prediction, math. Prescription, not prediction. And now we're here, and it's, we have to see what happens when we open. But my main point is that these numbers are thin. This 67.40 is a line in the sand, and that's would be a close below the weekly low. So I don't think that's happening. We have this whole zone here between 65 and 40 with supportive market maker hedging from this zone. We kind of have the 67.85 mentally think near 75 round number inflection point zone with, if we break, which I don't see it happening, but we could, 85, 75, 65, this little 10-point fly looking thing. But again, these numbers are small, so they don't really matter. I'm gonna turn the mic over to my colleague who does the SPX, the E-mini scalping and the NQ scalping, who also has a course in that. And while I find the chart, okay, go ahead, you're up. Okay, I thought I was turning it over to him, but apparently I'm not. You're muted.
Oh, sorry, I was muted. Good morning, everybody. Great price action yesterday. I think we're in store for at least half of that today. What I'm seeing here with ES, first level that I think is important to watch is where we are right now. 68.35 can get sticky, but in my opinion, if we hold above that, I would be targeting yesterday's high. And then after yesterday's high, I'd be targeting 68.80. So good potential moves to the upside if buyers decide to have some fun. Now, if we get to that yesterday high, I think there might be a small sell-off there. The size of the sell-off will depend on factors that I can't know until we get there. But if we do sell off so long that we're staying above that 68.40, I think we should continue to see buyers to the upside. That's the bull case. If we start selling off at open, I'm going to see if we can hold 68.20 if we can. I think that's it for the Bears in that case. If we break 68.20, I'm going to be looking for 6,800, maybe 6,805 for some support. And then I'll be playing between 6,800 and 6,820. I like the Bulls, the upside position here. But again, we still have, call it an hour before open. Things can change.
And so the 6,800 is roughly where we bottomed in the overnight session, and obviously it's a round number, so all eyes are on it.
Yeah.
What do we have? About a 25-point difference between ES and SPX? Anybody know?
Let me give you the confirmation right
It's
now.
40 over here. And I know it was 30 a few days ago. I'm not sure how much it's tightened up. Yeah, so I can mentally. So it's 27, it looks like. All right, so it's still in the 30th range, 30-ish range.
You said 47?
Yeah, that's
Yeah.
my back of the envelope math.
Mm-hmm.
It's still in the 30-ish range, 25, 30.
Yeah, so down there, 67.75. SPX is kind of where I'd be really watching.
And to me, if I want to put on my TA hat, so to speak, or price act, or whatever you want to call it, this looks like a picture of indecision.
Yep.
You know, the Bulls got, the Bears got theirs, you know, we broke down, we filled the gap, yay, we got to that critical level, but we didn't break it, so the Bulls can take a victory lap. And then we got back up to 6,800, and now we're just kind of waiting to see who wins the battle. I'll go on record saying I don't know when, it's not if, not when, that we make new all-time highs, and 7,000 plus is penciled in for the end of the year, no matter what. You know,
For today, in my opinion, if the Bears are going to get any action, it'll be after the Bulls get some. So if we do push up, we still have an hour, right, give or take. If we still push up from here to open, then I think the Bears will have some fun first. But the way I'm reading it, we should see yesterday's high right here at open, so long that we hold 68.30.
It makes sense. Now, I was kind of thinking about this when I was writing my notes. I didn't really delve into it to see if what I'm thinking is right or not. But, you know, a few weeks ago, skew was way low, if I'm saying it right, meaning that puts relative to calls were cheap, calls relative to puts were expensive. A couple of weeks ago, we were making all-time highs. Then, not surprisingly, over the last week or so, that's totally flipped on its head, where the 25 delta risk reversal, where the puts were overpriced and the calls were cheap. I think, but I haven't checked it, so I could be wrong, that the calls are still kind of cheap. I've been seeing some large institutional flow coming in for the end of November and end of the year, you know, these big 20,000 contracty kind of things, betting on upside. We saw yesterday a big order, not that big, I don't know, 6,000 contracts or something, big enough. Probably must have been Chewy, 6,000 contracts coming in for the end of the month, I believe it was, or for the OPEX at 68.30, 68.90, something like that. A big chunky wide, like 60 wide-ish debit spreads when we were a little bit below, when we were like at 6,800-ish, or 6,815. And so money is going into that. That's also going into the tail hedges because we see what VIX is doing. So, but my experience has been just when the bears are partying, just when VIX is acting crazy, just when the term structure looks all wonky and everybody is ready to stick a fork in the rally's ass and turn it over because it's done. Then we have the vol decay, we have the charm van of buyback from longer dated stuff, and we get that drift. Not every day, all the time, but to me, if we take that, couple it with the seasonality of November heading into December, the Santa Claus rally, coupled with buybacks, we don't really have much news on the horizon, so that's another real. The market kind of needs an excuse, sort of, to break ranks, and there's really not been much of an excuse. And we had earnings, so now we're chopping around. They're trying to read the tea leaves. Oh, are they spending too much on capex? Not enough. And the algos are doing what they're doing, and so the structure is just kind of spinning. And that's kind of my broader take. That's my long-term analysis hat. That's my Tom Lee hat.
The drummer?
No, you're right. Tom Lee, not the drummer. I think that's what he says on his Twitter.
Yeah.
Although Pam Anderson, but never mind. So, I mean, it's fairly simple. So let's take a look at the gamma setup one more time and look at some kind of trade structure-y kind of things, and we'll make it an early day today unless people have questions. Good morning. And if you could talk about your course after I do this.
Is someone asking?
Yeah, let me do this, and then you talk about it, like in about 5 minutes, and we'll talk about your course.
Sure.
Okay, so again, so this is SIN. Hopefully you can see this. We'll switch to depth view, which gives you the same information in a table view. And what I like about this, let me just make, okay, so what I don't like about this is we have yesterday's numbers. Here we go. Although it would have been good to review yesterday's action with those numbers, but okay. So here we are. We're in this zone, 200, 100. This is all nothing. This is immaterial, market maker action. So the first thing we see is a 68.25 market maker short, kind of an attractant, but if we don't get there, a repellent. And again, not much. So this is that free to move around the cabin zone. And really, if we look, there's no big numbers up to 68.65. And because of the chop, red, green, like I said in my note, don't torture the data. There's really, you can rely on your TA, your Fibonacci retracement, whatever crystal ball you like. But gamma's not really giving us that much information here. Similar setup around where we are here to the downside. Thin, a little bit of something at 85. 67.70 is the biggest local number. So should we start to see weakness, break down toward that 75, 85 overnight low area, which I don't think is happening, but you never know. That could easily happen. A little VIX pop. Then we start to go down in this direction towards 70. Then here's the biggest local support level at 67.40, and we have some layers in here, 65 to 40 area. And then, of course, the vol sellers came in yesterday and they sold it, way out of the money. I hear, the big dogs are down here taking the proverbial pennies in front of the steamroller, except it makes them money every day. A lot of people might laugh at it. Okay, so they're making, whatever it is, 0.5% or 1/4% or 0.5% on their risk of whatever it is. But the fact is that they make at least an easy 1% a week doing this, and they don't get hit. Even in that big debacle, they rolled once, taking a small hit. So laugh if you want, and let's just say, yes, they have 100 wide iron condor or whatever, 200 points out of the money. So yes, if we fall 500 points in a day, they're in trouble. If they stand there like a deer in the headlights, like if China launches an attack on Taiwan today at 11 o'clock, they're screwed. Other than that, I don't see it happening. Anyway, that's my soapbox about that. Anyway, so yeah, tell us about. Oh yeah, one more thing. I'm a big one for one more thing. When I speak at like meetings or seminars or whatever, I'm always the guy that says one more thing and I'll drop the mic, and then 4 things later I'm still talking. Yeah. All right, let's just take a look at one more thing and I'll really shut up. And we're going to switch to customer side of the table. It's just easier for me to think intuitively about VIX from the customer side of the table. And let's get a range from, well, we don't want a range from the past, obviously. What's today? Okay, well, we just had expiry, so let's just go from here. Okay, so this is customers' VIX positions. Let's get rid of net and look at calls. So you see this cluster here from whatever it is, 17, kind of 18, where we've been inflecting up to 19. That's customers' long calls. This is what's been market makers have been having to hedge, buying or selling futures. And when they buy VIX futures or sell VIX futures, they hedge it with SPX puts. It's 20 where we've stalled. Customers are short, market makers long stall area. We keep on bumping our heads against this, which so far is good. But if we get over, then we kind of have a little nasty stretch to 22, 23, and then we start stalling out up here. That's on the put side. If we just kind of net it out, the puts and the calls, the picture doesn't change much. The picture doesn't change much. The picture is kind of this path up. Really, if anything, the picture looks a little nastier with the pull up to 20, with the little stop right here at 19, and then if over 20, the pull up to 22. On the other hand, we have this sloppy zone, which we've been in between 20 and 17, 16, where we're like every half point, something's going to happen. So that's what's going on in the VIX space, just from a broader point of view. Okay, now you can speak. Tell them about your course.
Oh, yeah. So we've been having a lot of success It's a 2-week long intensive. I get into it one-on-one with you. We kind of leave no stone unturned with the way that I trade and the confluences that I use to enter setups. My system is very formulaic, so it's a clear entry, clear stop, clear target. And I think that's why a lot of people find success following that along really quickly. Just removing ambiguity makes steps a lot more cleaner and easier to follow. If you're interested, you're always welcome to DM me, ask me some questions. I'm more than happy to jump on a call with you and just iron out any questions you might potentially have. If you are interested also to just jump in the gun, do so quickly. We're getting a lot of interest, and because it is one-on-one, I can only do so many people at a time. But yeah, DMs are always open on Discord, X, Doc, if you wouldn't mind posting the link. Oh, you did? Great. Yeah, we'd love to have you and kind of build a nice little group in there. We are going to start doing regular workshops with everyone that's done the course, just to kind of freshen up, answer any weekly questions, that kind of thing. Looking forward to that.
And I'm looking around here. I'm not sure if I have the right links, so I can throw them all in. I definitely have to improve on this side of my game. A private academy, price action boot camp. This must be it. And we're also offering a special for the.
That's right. Yeah.
Well,
there's also a code out right now. The code is GELT. So if you use the link that Doc provided, if you use code GELT, you do get 20% off on the whole program.
And it's a 3-month deal with all the bells and whistles, which includes like the roadmap and unusual whales, and not just SPX trades, but regular options trades. Maybe some stock once in a while. I'm an old guy. I still buy stock sometime. What else? The mini scalping room gets thrown in there, so you can like hang out and watch everybody scalp or join in. Live screen share and talk through it. All that.
Yeah, we've been catching on NQ. We've been catching trades that are over 50 points a pop, so we've been doing pretty well in there.
Yeah, NQ is a wild animal, and you guys are great. I don't mess with it.
I don't mess for the faint of heart.
And not for the faint of heart. I don't mess with it. Okay, let's see. What do I got here? And shout out to somebody who does mess with it. Option seller, who's somebody on Substack who does something very different, who I've been kind of trading with. She sells NQ puts pretty much every day, naked NQ puts, makes money every day, but man, that's scary shit. That's scary shit. But you guys with those kind of nerves, God bless you. It's a little too it's a little bit much even for me. I'm okay with my 25-point, 20-point SPX spreads. That's nervy enough. Although I have been doing a little bit of the NQs, just a teeny bit, just to get my feet wet. All right. Any questions? Let me pull up the chart one last time to see where we are. I don't expect we're any place other than shopping. We failed kind of where we thought we would at the 15 level. And, oh yeah, let's talk about the expected move real quick. And we'll go to an up in the chain, and then we'll really get it started. See, I said reaction. Now, I wrote this. I didn't write this now. I wrote this at 6 a.m. Reaction, and there it is. a good round number, not rocket science. Stop zone is kind of at 85, where we had that little feature up to, the top here. I didn't put in top of the chop. Top of the chop should be up here. Must hold, that's where we had those short puts, also 67.50, the round number, and the 200 and the 20 MA, et cetera. All this stuff is down here. Local lows, etc. So let's take a quick look at I want to see SP E-mini just to get a feel for the expected move around 28. So the straddle has been decaying nicely overnight. Yesterday, when I looked like at around 9:30th, it was about 45. And then when I looked in the morning, it was around 32. Now it's 28. So the straddle is decaying in an orderly manner. So we like that. Okay, and so since I'm an iron conduit seller, and I have this asymmetrical fly here that I put on for credit yesterday, actually during the, like, I don't know, 2 o'clock or something. Sold this for about 50 cents during like the end of the day, whoosh down. So what would I do right now? Great, Doc, you did it yesterday. What have you done for me lately? Okay. So let's see, what would I like to, that's a little too, we like the 30, we said, right? We like below the 45, expected move, even this one, which is kind of lame, is 36. It's almost 2x the expected move. 70 cents is kind of juicy for that, for 15 wide. I'll take one, please. On top, well, we had those calls up there at 60. So gun to my head, that was a 15 wide. 40 cents. I'm not looking to get equal credit. This is not a DEI where I have to get equal opportunity credit on each side. I'm just trying to make money, trade levels that are safe. I could probably trade the 50, maybe even the 45. I'd rather wait till later in the day to see how that plays out. Now let's talk about flies. So the first kind of obvious fly, since I just happened to click puts, we'll look at that one. I already have crap there, so I probably can't put it in. Let's see if I can do something near it. Okay. 15. Okay, so I don't feel like spending $1.75 on a fly. Something like that for 80 cents. If I didn't already have a position there, I would look to take something like that. This isn't bad for $1.65. It isn't horrible. Might want to go a little lower, somewhere in there. Might even want to, let me see if I have something where I can like slip it in. $2.
And just for anyone that's watching, we're right at that 68.20 level here, right before open. Like I told you, if we had to push down before open, I think we're setting up nicely for yesterday's high, so long that we stay above 68.20.
And 68.20 is about 67, 90, 95.
95, yep. And if we hold this, into open, I'd be long to 68.35. Give it a 5-minute candle or two before entering.
Okay, so I can't find a good, I usually put these trades on TV, quote unquote, like I'm doing right now, and then I close them during the day. Here's yesterday's build, closed, whatever. Got credit of 150, whatever. I can't really recreate this. I have to go back too many days, and it's too much work to do right now. But they work. I post them in my Discord, and I post them on Twitter sometimes to show off. No, to try to teach you guys how to do it. And so we like the move above 6,800.
SPX?
Yeah.
Yeah.
And so why are these so expensive? That's not making sense why they're this expensive.
Now, if we hold right now, we're below 68, 23, 22. If we hold below 68.20, I think 68.05 will be a great place to long, which would be opening at 67.75 SPX, which I think makes a lot of sense.
67.75, which is
67.
The overnight
SPX.
Okay, so all right. So I don't know what happened here. I don't know if it was news, but obviously the landscape changed, and so not being a schmuck, I'm going to cancel this order because I'll be able to get it for more money later. I still like the level. I mean, dude, look, 67.05. I can get 50 cents down here. I'm going to take that. Obviously, I'll leave the calls in, and we'll see what's happening. I'll take a quick look in the volatility space. We got VIX acting a little nasty, and I think I'm looking at it similar. We maybe get a little bit of nasty action in the S&P 500 and in VIX at the open, and then look for that reclaim of 6,800, and look to march back up towards 68.15, yesterday's high, 68.25.30, something like that, and probably end up treading water and closing near where we are. That kind of is the likely case to me. Okay, everybody, I'm going to go and see what's going on here. I don't know if this was news or just trading bullshit, and we'll find out. Everybody take care. We have so we look bullish after this dump that's happening.
Yes,
we look bullish with more of an asterisk, but yes. We don't look bullish if we break 67. You know, let me.
Laura, it depends if you're talking ES or SPX, but I think if you're talking SPX, 67.75, in my opinion, is kind of the line in the sand.
Yeah, that goes about right. 70-ish, give or take a couple points. Yeah. You know, the bottom of the chop zone. We want the chop zone to hold. 85 or the overnight low 75, somewhere in here. And so when I say today's envelope, this was the bottom of the expected move last night. Now, some gurus like to use the expected move at the close as the target range is for the following day, because that's sort of like when everybody like place their bets. Now things move in the overnight, and you can always get expected move during the day, and that's kind of, in my mind, more tradable intraday. But at the same time, you gotta, I respect those end of day expected moves because those seem to have a lot of predictive capability. So, yeah, but I think my default is still bullish. Yeah. You too, Laura. Okay.
Bye, everybody.